In terms of the stock market, the relentless spread of the Delta variant has reached a tipping point. Now, on a tipping point, managers don't run. No, what do? They take aggressive action to ensure a worst-case COVID scenario is embedded in their portfolio. The money managers I talk to, they're calling it the second great pandemic. Now, I'm not going to litigate whether or not these moves are correct. Maybe we're rapidly headed toward herd immunity, as everybody who hasn't been vaccinated could quickly get immunity by being infected. And that has been my thesis. What matters is that there's tons of uncertainty. Is the government right to bring back mask mandates? How high are the students to student infection rates? We don't have them. Do I have to ask people to show me their clear symbol at the door of Bar San Miguel, my small plate Mexican restaurant in Brooklyn? Oh, that's appetizing. Is it up to me, or will some level of government make the decision for me? Can somebody help us? The truth is, I can't answer most of these questions, but I can tell you exactly what the big institutional money managers are buying as they try to find ways to play the Delta variant. And they do. They play the Delta variant. Yep, the spring 2020 game plan, I dusted it off for COVID outbreaks, and it started working today. Okay, it's an extensive list. I don't care. The new stocks that are on fire because of the new rules that make you feel like we're headed back into lockdown, even as we know we're really not. But it worked for us back then. It's going to work again. With everyone in the federal government to the CDC on down saying it's going to get worse before it gets better. Well, I got a going to get worse before it gets better portfolio. Let's start with the retailers. We need to reactivate WATCH. That's my acronym for Walmart, Amazon, Target, Costco, Home Depot, the major essential retailers that made out like bandits during the original lockdown. Wall Street seems to believe that once again, whatever's left of the independent retailers will finally be crushed by this new outbreak, and only the big ones can survive. Target's been the strongest. It has great back-to-school numbers. You can't go wrong simply buying the stock of Target in August because it's the place to shop for everything from school supplies to cozies, sports team uniforms. Brian Cornell will be on our network tomorrow at 3. I always love it when Brian's on. We got two guys from Queens on nationally. We got Faber on Jeopardy, and we got Cornell on our network. Home Depot's all about that pesky home office that needs to be built or expanded now that the white-collar workers aren't going back to work in person anytime soon. Costco feels like it's already up a lot, even though the stock's only rallied 15% year-to-date. We know Costco made a fortune during the first lockdown. It should do well in a pseudo-lockdown scenario. Notice pseudo. I don't think we're going to lock down. If you take away, it says, oh, Cramer's going to lock down, that's just it's just say you're a Twitter follower. I like Walmart because its stock is painfully flat for the year. We own it for the charitable trust, which you can follow on by joining the ActionAlertsPlus.com club. I think Walmart's poor performance has to do with the company's inability to compete with Amazon at the highest omni-channel level. Delivery. But that could change at any time. That's why I like the underdog in this dogfight. We'll find out more when Walmart reports in 2 weeks.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.